Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business and turn complex financial jargon into plain English. Today we're diving into a filing from News Corporation, and let's just say they're talking about buying back their own stock, which can mean a lot of things. Before we dig in, if you're all about getting straight answers from corporate filings like this and love seeing financial reports broken down, simply make sure you are subscribed. We also have a great community on Discord where we discuss these things further. Links are in the description below. Alright, so what we have here is what is called a Form 8K filing from News Corporation. Think of an 8K as a company's way of telling the market about any really big news that isn't already part of their regular financial reports. In this case, the big news is about their stock repurchase program. Now, what does a stock repurchase program actually mean? It means the company itself is buying back its own shares from the open market. They've authorized up to $1 billion for this buyback, and they're telling us they'll be acquiring shares of their Class A and Class B common stock. As part of the rules, especially for companies that trade on foreign exchanges like the Australian Securities Exchange or ASX, they have to report these buyback transactions almost daily if they happen. So this filing is essentially pointing us to those daily disclosures. This really isn't about a specific financial quarter, it is about ongoing activity. The company is saying, hey, we're continuing to buy back our stock as our program allows. And here is where you can see the details if you are really interested in the day-to-day trading. What is attached here are copies of the information that News Corporation provided to the Australian Securities Exchange. These documents contain what are called forward-looking statements. Now, forward-looking statements are basically the company's best guess about the future. They're saying things like we intend to repurchase stock. But here is the crucial part, and this is very important. They also warn that actual results could be very different from what they expect. They list a bunch of reasons why things might change. Things like the stock price going up or down, general market conditions. Basically what is happening in the economy, and even whether they find better places to invest their money. So why do companies buy back their own stock? Often it is a signal to investors that management believes the stock is undervalued. It can also increase earnings per share because with fewer shares outstanding, the same amount of profit is divided among a smaller number of shares. In News Corporation's case, they have two types of common stock, Class A and Class B. The buyback program allows them to purchase either. This can sometimes be a way to manage the number of shares available or to return capital to shareholders. The dates here are important. They're reporting on activity up to February of 2026. It is a continuous process, not a one-time event. This filing itself doesn't contain new financial tables or detailed earnings reports that you might see in a quarterly or annual filing. It is more of a procedural update to make sure they're meeting their disclosure obligations. Now, looking at the bigger picture for News Corporation, they are a global media and information services company. Their businesses span across various media, including newspapers, television, and digital media. Understanding their stock buyback needs to be seen in the context of their overall strategy. Are they buying back stock because they have excess cash and few attractive investment opportunities? Or are they doing it because they feel their stock price doesn't reflect the true value of their assets? This particular filing doesn't give us the financial performance details directly, but it hints at how they are managing their capital structure. From a Warren Buffett perspective, you want to see companies buy back stock when it is truly cheap and when that buyback genuinely increases shareholder value in the long run. $1 billion buyback program is significant and it signals a commitment to returning capital. However, without seeing the operating results and the cash flow generation alongside this buyback, it is hard to say definitively if it is the best use of their funds. So what is the takeaway here? News Corporation is actively managing its share count through a substantial buyback program. This is a regular part of their operations, and they are being transparent about it by reporting to exchanges like the ASX. While this 8K doesn't give us the numbers on revenue or profit, it tells us about capital allocation. It suggests they have confidence in their future and are looking to reward shareholders. What is your take on News Corporation's stock buyback strategy? Do you think it is a smart move, or is there something else they should be doing with their money? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and I'll see you in the next video.